All right, so looking at the costs that we need to consider. This seems like a pretty obvious thing, but it's just super important that everybody stays on top of this because more often than not, people have a good understanding of the margin that they're making. And then they get to month end and they've made no money. And that's just because they didn't have a firm handle on what costs are running through the business and how that's eating up the margin. So this being caught out, this happens to the best of us. Personally, I know that this has happened to us. Where previously I spoke about in one of my businesses, we expanded our product range and we took on camping chairs. Now those camping chairs, we were selling them at a retail price of 575 Rand with a gross margin of 40%, which is awesome. We're making 200 Rand per sale and we're selling lots daily. We're selling those things out. And we're really excited about a 40% sale that was ticking over nicely through the site. At the end of the third month, however, we assessed our delivery fees and we saw our delivery fees had skyrocketed gone through the roof. And when we looked at it, we very clearly understood that the size and weight and the volumetric size of a camping chair, it's long and bulky, and the amount of packaging that it takes, it was costing a lot. And we weren't attributing the cost per delivery to the actual sale to understand the profit per sale, or to get a clearer picture of which sales we were losing money and which sales we were making money on. And when we did that process, we realized that the 200 Rand profit that we were making per sale was becoming negative because it was costing us 300 Rand on average to ship that product out to the customer. And it just that story makes me laugh when I think about how you think you're on top of the numbers and then you're selling something at 40% and suddenly you're losing money. How does this even happen? It's all about having a firm understanding of your costings. So when we look at costings, there's a lot of stuff that seems pretty obvious, and there's other things that people don't see until they get into the business. And that's kind of what we're doing here, right? We're looking at what's going to be affecting your numbers before you get into your business, because we're validating whether or not we're going to be profitable. So something you need to be aware of is credit card fees. This is a big one because the credit card fee is taken off the retail, the selling price of your order. When somebody swipes their credit card on your site, you can be charged as much as 3.5%. In fact, that's kind of the industry standard until you start building a track record with the payment gateway provider and you can negotiate a better price. So that's 3.5% haircut off your margin up front. So 40%, you lose 3.5% to the payment gateway already. So that's over a month-to-month basis, that actually adds up to a fair amount, and you need to factor that in because 40% isn't 40%, 20% isn't 20% because it's being eroded by this. What about your cost of returns? Have you accounted for that? You might be surprised that a lot of the biggest brands around the world have an acceptable failure rate of 3% of their products. They can't have everything work. So they accept that 3% is going to fail. So when you send out 100 products, you can expect that at least 3 are going to come back. And think about the costs that are involved with that, because in order to give a good customer service, you're probably going to pay for the courier to pick it up and bring it back to you. Then in terms of the complexity cost of somebody receiving that, checking it in, assessing it, there's time and there's staff costs involved in that. Now you've got to warehouse that product, you've got to pay insurance for that product, and eventually you're going to send it back to your supplier, whether that's a local shipment or overseas. That affects your costing. And it's very important to account for that and just to be prepared for those kind of costs. In terms of VAT registration, definitely worth speaking to your accountant about how this affects you and whether or not you should VAT register and at which stage of your business. A lot of businesses that are starting out think that being not VAT registered is the best thing to do because otherwise you're giving SARS 15% of your turnover, right? That's not a good idea. And again, we're fighting for every percent that we can. So 15% given to SARS, that's just not a good plan. But you must also keep in mind that when you're starting out your business and you're doing capital expenditure, laptop, you're buying stuff, maybe you've got to buy a vehicle or whatever you're buying, if you're not VAT registered, you can't claim the input VAT off that sale. So it's important to have a firm understanding and speak to your accountant about how that's going to affect your business and your costs. Up next, let's look at cost of capital. Have you taken a loan? What's that loan going to cost you? Besides the cash flow point of view, because you need to be paying that back every month, a portion of your repayment will be interest and a portion will be capital. The interest is a pure cost, and that's coming out of your business. So you need to understand how much that's going to be. And again, negotiate with those banks or whoever your lender is. Negotiate as much as you can to get that rate down. It'll save you. Let's look at regulatory costs. If you're importing a product and it has a signal of any sort, you need to register it with ICASA. Did you know that that's going to cost you 4,452 Rand? Right? Now that's a cost that you need to consider. Or if you're doing any sort of dietary supplement or medication, do you know that it can cost you as much as 100,000 Rand to register that with the MCC? And it can also maybe take you up to 9 years to get that product to the market, just saying. So be aware of that. But these are regulatory costs, or things that you need to research and understand, because that's going to be a cost on your bottom line at the end of the month. Import duties is something that people miss often until their first shipment gets to customs, and customs phones you up and says, we'd like to send you an invoice, please, for 20% of the value of the product that you've imported. Now, if you haven't prepared for that, 20% of your value is going to be a bitter pill to swallow, especially when you're building a product or a business around this product. So super important to understand what import duty, if any, your product is going to attract if you're importing. Now I'm going to help you out here, because in the course notes below this video, I'll give you a link straight through to the SARS tariff spreadsheet. If you can just speak to your supplier and get the HS Hotel Sierra tariff code, HS code, ask that of your supplier, take that code, look on the spreadsheet, and you'll see, are you getting 0 rated, are you getting 20% rated, or is SARS going to take 30%? Are they going to charge you 30% of the value of the product that you're importing? Understand that up front, because many people are being caught out by that, and it will hugely impact your profitability at the end of the month. Beyond this, let's think about other costs that are going to be running off your accounts each month. Phone and internet, rent, staff, salaries. What about depreciation, website hosting? Marketing's a big one. Marketing is, you need to budget for that. Entertainment. And you can just look at, download or look online or speak to your accountant again for a template of an income spreadsheet. And on the income spreadsheet, it'll itemize the different lines that most companies will be having on their expenses sheet. And then just work through each one and see where you're going to be spending money. And just go through that process. Because let's just emphasize the importance of staying on top of the numbers. Let's just look at this that case of the camping chairs, where we looked at this, making 40%, making 200 Rand per sale, right? So let's stick with the example and let's keep some round numbers. Let's say that for each camping chair, where we're making 200 Rand, there are direct costs for that sale, which add up to 100 bucks. So direct costs, I mean costs that happen because of the sale. Credit card transaction fee, 3.5%. The shipment fee, the courier delivery fee, that's normally quite a large one if you're paying for it. Otherwise, the customer will pay for it. Other direct costs could include packaging, picking, and dispatch, if there's any fees around that. And let's say, for the sake of the example, that those costs come to 100. So now our 200 Rand gross profit is squeezed down to 100. And continuing the example, let's say that our overheads, our monthly costs, are 10,000 Rand. So we're making 100 Rand per camping chair. We've got 10,000 Rand of cost to cover, which means that we need to sell 100 chairs just to break even. So we need to sell 100 chairs to make 10,000 Rand. So that at the end of the month, we are at 0. We're not making a loss. Any chairs that you sell beyond that, so if you can sell an additional 50 chairs, you're then making profits. Then per chair, we're making 100 Rand profit. So if we sell 150 chairs in a month, at the end of the month, we're going to have 5,000 Rand left over. That's our net profit. Although, let's just keep in mind that's net profit before tax, because SARS is going to take 30% of that. So it seems quite dire. And that's not what I'm trying to say. It's just what I'm trying to emphasize is that if you're not on top of your numbers, very quickly your profits are going to be eroded, and you're going to be getting to a situation where at the end of the month, you're looking at your accountant, he's shaking his head at you and he's saying, like, why didn't you know that you had all these costs? And the only person you can blame is yourself, because if you haven't gone through this process correctly and understood what your costs are going to be, then no matter how much profits you're making, if you're making a lot of costs at the same time, you can end up with nothing and you can lose money. So just be well aware of that. Work through this process correctly and involve your accountant, because getting the numbers up front from day one is so critical to making long-term success, because otherwise you're going to be out, your business is going to be closed. So I've seen it happen far too many times. Keep on top of the numbers, please, please, please. And it will help you to achieve success. So this concept takes us nicely into the next video, which is going to be about how much margin do you need to be profitable.